Nothing stops a new aspiring Amazon FBA seller in their tracks faster than the thought of sales tax. There's so much fear and anxiety around the topic that I thought I'd break it down really simply for you guys so you can put the thought of sales tax in the back burner and actually focus on making the sales. What's up, Empire Builders? JT Franco here. For those that don't know, I'm a six-figure Amazon FBA seller and mentor, but what I am not is a tax professional. So this video is for informational purposes only. Just as a disclaimer, it is not legal advice. If you want specific legal advice for your business, then make sure you seek out a tax professional. Now, quickly before we go any further, congratulations to only one Miss Kelly on Instagram. You won the $100 giveaway today. If you want to find out how to win the next $100 giveaway, then make sure you watch until the end of the video. So, sales tax. How does it work for Amazon FBA sellers? On the first layers, it's the same as any other business. It's going to come down to physical location. Okay, so number one, your physical location. So where you live, you're going to need to collect sales tax in your home state. Next would be is if you've incorporated your business in another state. So if you live in California, but you incorporate it in Florida, you're going to need to collect in those states. And then third would be is if you have a team or if you have employees living elsewhere. So you have a team in Texas, you're going to need to collect there as well. So those are the physical locations for your business, right? Now, this is when it gets crazy for FBA sellers is you're going to have to collect in the states where your inventory is held, okay? So now think about that. The states where your inventory is held. For Amazon FBA sellers, there's like 20 plus something warehouses out there that Amazon will distribute your inventory to. So even though you send your inventory into, say, Texas, if you're making sales, which you should be, you will be, then they're going to be distributing your inventory throughout the entire United States, right? So you're going to have to then collect for every single warehouse that your inventory is sitting in. Now, that's where it gets crazy. That's where it gets scary and where most sellers freeze up when they hear that, right? That's just an overwhelming task, an overwhelming thought even just to think about that. So what I'm going to do today is give you a game plan or give you kind of an idea of what you can do. Now, again, I'm not a legal professional, but this is just advice that I've gotten from Jeremiah Kovacs, who's the CEO of Muse Minded. He's in our Empire Academy, so I'll link his company down below if you want to contact him. So first off, the big question is when should you hire help like Jeremiah or an accountant to kind of oversee everything for your business so that it gets more manageable? Well, at the beginning, when you're starting out, you don't really need to hire professionals to do it. You totally can do it yourself. Because if you're not making that much revenue, it totally makes sense to just do it on your own so you can save costs. Now, when you get to a level where you're making $20,000 to $30,000 per month in revenue, then you can start looking out and seeking out help to kind of manage the books for you. Because at that point, it makes sense to outsource, that heavy lifting and take that burden off your shoulders, and you can afford to then get the help you need monthly. Yearly, whatever it may be. So now, what are your options, right? As I said, you are legally obligated to collect sales tax wherever your inventory is held, but that is just by the book, right? So there's three approaches. The first one is the by the book approach. This is when you are proactively finding out where all your warehouses are, and then right away registering for a license to collect sales tax in that state. You have to file for a license. You can't collect sales tax if you don't have a license to do so. So you need to file to collect sales tax in that state, and you're good. You're golden, and that is the by the book approach, right? But then you got to think about the cost that it's going to take to do all that, to get all that accounting done every single month or every 3 months or every year, and to file and to get, you probably don't want to do that by yourself. There's 20 plus states that you're being held in, and you're already going to be hiring help at that point. So if you're beginning, that might not make sense, right? Because it might cost you more to actually go about that route and play it by the book than it would cost you if you actually got caught and got fined. So not many sellers that are starting out will go that route. Again, I want to stress it's not legal advice. This is just informational purposes. So on the other end of that spectrum is kind of the wing it approach, where you are just collecting in your home state, and then for the warehouses, you are just going to wing it and see if anything. It's the reactionary approach, right? You're not being proactive. You're not registering or filing unless something comes back at you, and then you're going to react and then file there, right? So it's the catch me if you can kind of deal, right? If they can catch you, then you're gonna react to it. Now, between those two, there is the middle ground, and this is where most sellers are going to go, and this is what most people are going to suggest is going to be called, I believe Jeremiah calls it the ladder approach, or the stair step approach. So the stair step approach is kind of in between the two. So you're not going out and finding every single state and then getting a license right away. Instead, you're setting yourself a threshold. Okay, so you're going to collect in your home state. You're going to collect in wherever you have employees and wherever you're incorporated. And then for the other states, you set a revenue amount. So say you make, you set it at 1,000. Okay, so if you set it at 1,000, by the time, once you hit $1,000 in revenue in a certain state, then you register for the license and you start collecting there. So you're not, you're not collecting in a state where you got one sale, right? So that's kind of gives you an easy way to manageably, is that a word? Manage your costs and expenses that way, so that you're not jumping in and having crazy expenses and where you don't need to. You are hitting it as you hit the point, right? So you cap yourself out at a certain revenue number, and when you hit that, then you go and file so that you're minimizing the risk. So that is kind of the three options of how you go about that. Now, I know you're wondering, how do you do that? How do you know what warehouses your inventory is stored in? Now, there's a great article on how you can do this by yourself by just using the Amazon Seller Central reports that they give you, but there is quite a few steps to do it. So if you want a more seamless way to do it, easier way to do it, I'll link a website called wherestock.com, and there they'll give you a full detailed report on all your inventory, where it is, and when it arrived, and everything like that. So it's like $29 to sign up, and it's simple as that. So once you find out where all your inventory is, the next step is to register for sales tax, right? So you got to register. If you're going, by threshold, then once you hit a certain number of sales in that place, in that state, then you're going to register for the license, and then you're going to start collecting sales tax. So how do you start collecting? Do you have to know the different rates in each state? No, all you got to do is go into Amazon Seller Central, go to tax settings, and turn it on. So it's going to automatically collect the rate for the state, and then it's going to, I think Amazon does charge you a small fee to do that, but it's simple as that. So you don't have to worry about it, and then Amazon will send that to you along with your bi-weekly payouts. So as simple as that. You turn on the settings, and then once that's all done, you know where your inventory is, you register in the state, you got sales tax turned on, then you're going to pay the state, right? You're going to remit the taxes to the state, and you're all good to go. You are clear and free. So it's as simple as that. It's really not as overly complicated as it seems. There's a lot of great tools, and there's a lot of great services out there that make it very easy to go about the process and make it very much worry-free, right? So if you want to also reach out to Jeremiah Kovacs, I'll link his website, like I said, Muse-Minded. He does have free resources on how to do all of this. So if you're still a little lost, I know it's still a very basic overview. If you're still a little lost, go to his website and grab his great free resources. Now again, as a third disclaimer, this is for informational purposes only. I am not giving you legal advice. I just wanted you to have a broad overview, because this has been requested a lot in just the last week, like you saw at the beginning. So if you want to win the $100 giveaway like only one Miss Kelly did, then this is all you got to do. Listen up, because the rules are different from the last one. So number one, like the video. Number two, comment on the Instagram picture of the day, and number 3, comment on this video. So that's all 3 steps you got to take, and you'll be entered to win the $100. So hopefully this video did help you out. I'm JT Franco. Make sure you subscribe to become an empire builder as well. And what is an empire builder? An empire builder is every single one of you that grinds day in and day out, but most importantly, you never give up because you know that your empire awaits.